We're live.
Oh, we are? Hey, Rick McBride here with your Property Masters in 5 minutes of free time. Obviously not a highly produced video here. Today, I saw in the Beacon, the West Volusia Beacon, or the Land Beacon, whatever it is, they published the tax rates for the area, individual cities, the counties, schools, and the hospital, the final tax rates, summing it all up. I'm going to take a look at that and figure out where you stand and what different people did. First of all, you have the 2016 tax rate in the image that you can see there. You have the 2017 rate, and then you have the rolled back rate. And then they tell you the amount of increase. Every municipality in the area increased taxes based on the rollback rate. So what that means is a rollback rate is the rate that would cause your tax to stay the same. So for instance, your property value went up $10,000, so if they keep their tax rate the same, you're going to pay more in taxes. If they roll the rate back to compensate for the amount that your property went up, that is the rollback rate, and then they would collect the same amount of revenue. Some argue that this is akin to a sales tax. So they didn't actually raise the rate. Your property value went up, so you paid more taxes. If they raised the price on a widget at Home Depot from about $10 to $15, well, the sales tax rate stayed the same. You're going to pay a little more tax on that. So that's some argument. Others argue that it's a tax increase if you don't use the rollback rate, because ultimately the property owner pays more in taxes. I'll leave that for you to decide where you stand on that. But that's the argument. Comparing the rates, though, the lowest tax rate by far is DeBerry at 2.9247. That is 3 points below even the second rate of Pearson at 5.83. The secret there is the two power plants in the city that subsidize the residents' tax rate. The highest tax rate by far is Orange City at 8.0650, surpassing Lake Helen, who had always been the highest tax rate. So Orange City's rate up to 8.065, and these rates are in mills, so that is cost per thousand. So you take your property value, $100,000, so let's say $100,000 divided by per thousand, there's 100 thousands, so you would multiply the rate times 100. So in DeBerry, you would pay roughly $292 in taxes on a $100,000 property with no homestead. In Orange City, you would pay $806 in taxes on the exact same value property. The largest rate decrease came from Deltona. They decreased their rate from 7.95 to 7.85, down 10 one-thousandths, basically 10,000th actually. And then the largest rate increase again was Orange City, up 0.615. That's quite a bit. The lowest percentage increase, as a percentage, was DeBerry, up only 1.99%. And Orange City again is the highest percentage increase, up 14.45%. They raised their taxes. If you live in Orange City, your taxes went up 14.45%. The second highest increase was Deltona, going up 7.9%. But that's because their property values went up so much. They actually lowered their rate, but they didn't come close to their rollback rate. And so their property values in Deltona went up far more than other areas as a percentage of value. In addition to the municipality, you also pay taxes to the county, the schools, and the hospital. All those taxes increased as well, although the school board reduced their tax rate from 6.84 to 6.52. The largest increase of all taxes came from the hospital authority, who raised their rate from 1.59 to 2.366. a whopping 49.8% tax increase for the hospitals, almost 50%. Summing it up, all in all, every property owner in West Volusia will pay more in taxes this year, some more than others. To calculate your rate, you simply divide your property value by 1,000 and then multiply by the rate. You actually first subtract out your homestead exemption of $50,000 if you haven't, then divide your property value by 1,000 and then multiply by your rate, because the rates are quoted in mils or 1,000. So using a $300,000 example in DeBerry, I should have my board out. Using a $300,000 example in DeBerry, you would have a $50,000 exemption, so your tax would be based on a $250,000. Divide that by 1,000, there's 250 times your rate of 2.9247. So your tax on a $300,000 house with an exemption in DeBerry would be $731.18. You would then do the same for the county schools and hospitals. So if we take DeBerry at 2.92, Volusia at 6.1, the schools at 6.52, and the hospital at 2.36, and add them up, you will have the total amount that they will tax you. And that rate is 17.9107 mils. So you plug that back into the equation, 300,000 minus 50,000 gives you $250,000 as your taxable value after your homestead exemption. Divide that by 1,000, you're left with 250,000 times the combined rate of 17.9107, and your tax on a $300,000 house is $4,477. If you're thinking about selling, if your property has gone up in value, call or text us. We will get you top dollar for your property. 386-866-1007. Our Master's Marketing Program gets you top dollar. Have a great day.